Let me start by saying something that almost nobody wants to hear, but almost everyone already knows deep down. If you've been trading for a while, and when I say a while, I don't mean a few days or a few weeks, I mean months or even years, and you're still not consistently profitable, it's probably not because you haven't found the right strategy yet. It's probably not because the market is manipulated against you. And it's almost never because you're unlucky. The real reason most traders fail is much closer to home than that, and that's exactly why it's so uncomfortable to face. Once you truly understand this, blaming the market, the strategy, or other people stops being an option. Most people would rather believe the market is unfair than accept that they are inconsistent. Because if the market is the problem, then nothing needs to change internally. But if the problem is you, your decisions, your behavior, your reactions, then responsibility becomes unavoidable, and responsibility is heavy. What's going on, everyone? Welcome back to the channel. If you're new here, this channel is about real trading. No hype, no fake lifestyle marketing, no cherry-picked screenshots, and no promises that trading will magically fix your life. Just honest conversations about what actually works, why most people fail, and what trading really demands from you over time. Today, we're breaking down the real reason why most traders fail. And this is not going to be another surface-level explanation you've already heard 100 times. This isn't just about risk management. This isn't just about discipline. And it's definitely not about intelligence. Because if those things alone were enough, far more people would already be profitable. The issue is not knowledge. Most traders know far more than they execute. The issue is execution. Not execution when things are calm, easy, and going your way, but execution when money is on the line, when emotions are involved, when you're tired, frustrated, bored, or coming off a loss. That's where most traders break down, and that's where accounts quietly bleed to death over time. Most traders enter the market believing one core idea, even if they've never consciously said it out loud. They believe that once they find the right strategy, everything will finally click. That profitability is locked behind some perfect setup, some special indicator, some secret combination of rules they just haven't discovered yet. So they search. They hop from strategy to strategy. They add indicators, then remove them. They watch hours of YouTube videos. They buy courses. They backtest late into the night. And sometimes, just long enough to reinforce the belief, it works. They catch a good streak, a few green days in a row, maybe even a good week. Confidence rises, anxiety fades, and in that moment, they think they've finally figured it out. They think, this is it. This is the turning point. This is the strategy that's going to change everything. But what they don't realize is that the market hasn't changed. Their psychology has. They're calmer, they're more patient, they're following rules more closely, not because of the strategy, but because things are going well. Then the market does what the market always does. Losses show up, variance appears, drawdowns happen, and suddenly the same strategy that worked last week feels broken. Doubt creeps in, fear returns, emotions flare up, rules start bending, and before they know it, they're right back where they started, questioning everything again. This cycle repeats for years for some people. Here's the truth that almost no one fully accepts. There are thousands of profitable strategies. Simple ones, mechanical ones, boring ones, repetitive ones. The market is not short on edges. What it's short on is people who can execute one edge consistently without sabotaging themselves. The edge is not hidden in complexity. It's hidden in discipline under pressure, over time, without deviation. Trading is not difficult because charts are complicated. It's not difficult because technical analysis is confusing. Trading is difficult because it forces you to confront your own psychology in real time, with money on the line. In almost every other profession or business, structure is built in. You have schedules, you have bosses, you have deadlines, you have rules, you have external accountability. In trading, you have none of that. You are completely free. You can enter whenever you want. You can size however you want. You can ignore your rules whenever you want. You can revenge trade. You can overtrade. You can gamble, and no one will stop you. That level of freedom exposes people in ways they are not prepared for. You can do everything right and still lose money. That single fact alone breaks many traders mentally, because most people are wired to believe that effort equals reward. In trading, effort does not guarantee results. You can follow your plan perfectly and still lose. You can execute flawlessly and still end the day red. And if you are emotionally attached to outcomes, this will destroy you. You get instant feedback on every decision you make. Every win feels like confirmation that you're skilled. Every loss feels personal, like proof that something is wrong with you. And because your money is always at risk, emotions are always present, even when you think you're being logical. Trading doesn't create fear, greed, impatience, or ego. It reveals them. It pulls them to the surface and forces you to deal with them. This is why people who are successful in other areas of life often struggle so much with trading. You might be disciplined in the gym. You might run a business. You might perform well under pressure at work. But trading hits differently, because the pressure is internal. There's no one to blame, no one to answer to, no system protecting you from yourself. It's just you, your thoughts, your emotions, and the consequences of your decisions. So here it is, clearly stated. The real reason most traders fail is because they cannot follow a simple plan consistently when emotions are involved. Not once, not occasionally, but day after day, trade after trade, over hundreds and thousands of repetitions. They know what they're supposed to do. They know their setups. They know their risk. They know their rules. But knowing and doing are not the same thing. If we're being honest, you already know when you shouldn't be trading. You know when you're tired. You know when you're emotional. You know when you're chasing. You know when you've already hit your max loss for the day. You know when a setup isn't fully there. But in the moment, emotion speaks louder than logic. Fear of missing out, fear of being wrong, fear of ending the day red, and every blown account starts the same way, with one small rule break that feels harmless in the moment. Most traders don't lose money because they're wrong about direction. They lose money because of how they behave when money is on the line. They size up after a win because they feel confident, almost invincible. They refuse to stop after a loss because they want to make it back. They chase moves they missed because they don't want to feel left out. They turn day trades into prayers because accepting a loss feels worse than hoping. Think about how most losing streaks actually begin. They don't start with one massive mistake. They start quietly. One trade taken outside the plan. One extra contract added because it looks good. One stop moved just a little further because it might bounce. One emotional decision justified by a story you tell yourself. And once that line is crossed, it becomes easier to cross it again. Discipline doesn't usually disappear all at once. It erodes. You could have a win rate as low as 40% and still be very profitable if your risk is controlled and your behavior is consistent. But if your behavior changes based on how you feel, you don't stand a chance. That's why one red trade turns into 5. That's why one green day turns into a red week. That's why one emotional decision can erase months of slow, boring, consistent progress. Some of the smartest people in the world fail at trading. Doctors, engineers, lawyers, highly educated, highly capable individuals. And it's not because they lack intelligence. It's because intelligence does not equal emotional control. In many cases, intelligence makes things worse. Smart traders overanalyze. They rationalize bad behavior. They convince themselves that this situation is different, that they can bend the rules just this once, that they can outthink probability. But trading doesn't care how smart you are. It doesn't care how confident you feel. It doesn't care how good your last trade was. The market doesn't reward cleverness. It rewards consistency. It rewards discipline. It rewards repetition. Nothing else. The biggest difference between losing traders and profitable traders is not win rate, strategy, complexity, or market knowledge. It's what they focus on. Losing traders focus on outcomes. Profitable traders focus on process. Amateurs wake up thinking about how much money they can make today. They think about how fast they can recover a loss. They obsess over catching the next big move. Professionals ask different questions. Did I follow my rules? Did I size correctly? Did I execute cleanly? This is why profitable traders often look boring. Their trades look repetitive. Their days look uneventful. Their routines don't change. And that's exactly the point. Consistency doesn't feel exciting. It feels mundane. And most people don't fail at trading because they can't make money. They fail because they can't tolerate boredom. If you actually want to stop failing, your focus has to change completely. One setup, one risk size, one execution plan, one daily max loss, one goal. Rule following. Journal your trades, but not just the charts. Journal why you entered. Journal how you felt. Journal whether you followed your rules. Track your mistakes. Track your emotional patterns. Track your behavior. Stop obsessing over daily P&L. Stop tying your self-worth to single trades. Stop letting one red day define how you see yourself as a trader. Progress in trading is slow, it's uneven, it's boring, and it often doesn't show up in your account right away. But over time, consistency compounds. Here's the final reality check. Trading is not about being right. It's about losing without spiraling, winning without ego, and showing up the same way every single day regardless of the outcome. Most traders fail because they never master themselves. And most quit right before that internal shift finally happens. If this video made you uncomfortable, that's a good thing. Discomfort means you're paying attention. If you're serious about trading, comment "discipline" below. Not for me, but for yourself. Like the video if it helped. Subscribe if you want real trading content. And I'll see you in the next one.